Hello, this is John Piper with the weekend video clip, and it's Saturday the 23rd of September, and today we're looking at the Dow. In fact, I want to look at the longer term chart. This is a weekly chart going back to 2009. Now, it's generally agreed between Elliotians widely that the 2009 low was a key fourth wave low with a key fifth wave coming in to see a major peak with possibly major consequences for the world and the world economy. I don't plan to go through that. It's fairly complicated, and I think this is probably enough. If you want more details, then please just drop me an email. I'll send you some detail, or cover it in a weekend review, but not a weekend review, in one of our subscribers' reports rather than this weekend report. Now, in a simplistic fashion, you could say that there's a two wave there and a four wave there, and therefore we've got a simple 1, 2, 3, 4, 5. However, if we look at the wave 1, we find that it looks more like an A, B, C. To counter this, the revised count, or something more complex count, is this is a 1, 2, 1, 2, 3, 4, 5, with a fourth wave coming in to match this two wave here before we see final peak. Possibly, my own view is once you see a peak, you should monitor it and see how it goes before making too many decisions on what it might be. So for my money, the peak coming in here could be more important than that. And so we'll be looking quite carefully at how it goes. So let's now switch to the action since this low here in 2016. This lower we generally agreed to be part of a wider correction, ABC, but irregular. So the key level is there. Right, so going from this low here, we have a 1, 2, 3, 4, 5. That's one wave. That's wave 1. ABC 2. Then a 1, 2, 3, 4, 5. That's the third wave. Fourth wave. Now 1, 2, 3, 4. And we're now looking at this pattern here to what comes next. So we'll go down the leg and look at the action in the last couple of months. Okay, still on the daily chart, so the low came in here, and the two biggest corrections are these two, so I count those as waves 2 and 4. One, bit messy here, 1, 2, 3, 4, 5. Now we've got 1, 2, 3. Looks like the 4's coming in now. Finally seeing a bit of downside. So one more rally up here. Could see the end of this move. It could be fairly soon, really. Right, so this current move here looks like a fairly minor A, B, C maybe. So a bit more action down 22,000 before we see a final fifth wave to complete this pattern, which could be, I say, a fairly serious high. Coming to the right time of year, sort of October time. It's often a time when things do peak, and we'll be looking out for this quite carefully. Obviously, this could be a fairly serious, a serious consideration for market participants. Certainly, those who want to go short, those trading gold, those who wish to protect capital in what could be a fairly unpleasant situation with all the debt around, governments trying to grab cash, etc., etc. So yes, it's fairly serious. Right, a quick look at FTSE. We're still in this meandering fourth wave correction. No real change here. There's maybe an ABC, I think. I'm not sure it's going to see a fifth wave. I mean, we would expect one perhaps. 1, 2, 3, 4. But I know it's just taking so long doing it, and it's beginning to wonder whether we will. But even if we do, it's not going to be a huge move, about 100 points or so. I'm not too interested in that. More interested in looking for a buying opportunity. So not doing much on FTSE right at the moment. Right, pound dollar is interesting. Could be a big call coming here quite soon. We've got a 1, 2, 3, 4, then a 1, 2, 3, 4, 5. Nice spike there. Don't get any better spikes than that. The action since then hasn't been too convincing. It could be a 1, could be an A, B, C, 2. It could be the start of something, but big buying spike there. So I'm looking for a confirmation that this is the peak. So I'll be actually looking to short this. I'm short currently. That's a short-term position. I don't alert short-term positions. although I may mention them in the WhatsApp room and discuss it there. But as soon as it gets confirmation, I think if we take this low out there, then that would be a decent signal to confirm the high is in. In fact, an extreme stop below there makes sense. If you're on a big call subscriber, you have access to extreme stop. It's a free system which is free to all subscribers, and there's a link in the reports on that. So an extreme stop below there would seem to make sense in the situation if you want to enter this. Short-term traders may want to put it in already, or they may want to enter when they feel the time is right. Right, gold's gone lower than I'd like. From the 2006 low, we have a 1. I count this as an ABC2. We've now got a more complex pattern. So it could be a 1, 2, 1, ABC2. Then a 1, 2. This doesn't count too well as a 5-wave advance. So at the moment, we could easily see more downside. I want to monitor this more carefully. Let's have a look at the internal pattern there. Right, the peak came in here at 1360. We could count a 1, 2, 1, 2, 3, 4, 5. Well, of course, that could be an ABC as well. A, B, C. We just need to see, really to clear the air, we need to see something impulsive. We're not getting it. And this looks pretty corrective. We're going to go lower. This does allow for alternative counts, allowing for much bigger declines. Let's go back to the daily chart. One alternative, which is what Market TPA is suggesting, is that you got this 1, then you got an A. This is all a great big B, and it does count better as a B, one has to say. I think you've also got some kind of parity between this move and that move, perhaps not quite. Now you've got a big C wave coming in, so I want to mention that because it's something to be aware of. I think that certainly is a possibility. I'm quite surprised to see gold do that, and I think we're going to see. I think markets are peaking. Equity markets are peaking. So I thought gold would be going up rather than down. Having said that, markets love to shake people out. So perhaps as markets are peaking, gold will shake everybody out. So that when the rally comes in, there'll be few passengers. So that's one thing to be aware of. If I see a good short opportunity, then I will say so. Haven't seen one particularly yet. I'm expecting a correction. We've seen a correction. It's gone on. Not much for them. Maybe just $10 more than I was looking for. But that is enough to query the pattern a bit. So a bit more monitoring is required really before we take any. I've still got quite a few holdings: gold itself, gold coins, equities, ETFs, etc. Right, on to Bitcoin. Right, here's the hourly chart of Bitcoin on Konergy. Looking at the hourly chart, then this move here looks like a third wave. It's longest. So we've got a 1, 2, 3, and then there's 4 down to 1800. Then there's clear 5 up to 5,000 on some exchanges. So we also got a 1, 2 here. So suggests that this is actually a fourth wave. It could already be over. We hit 3,000. And there's quite a good pattern now, but the pattern is slightly ambiguous. And I'll switch to a TradeView chart because I think it's easier to see for the discussion on the latest action. Right, going from this peak here at 5,000, we have a clear A, B, then we've got an A, B, and then a clear 5-wave C. That's pretty crystal clear down to 3,000. Okay, so what's happened since 3,000? So we've got an ABC correction on 5,000, 40% decline, 2,000 points. This kind of action you see in Bitcoin in 2 weeks compared to seeing it in perhaps 2 years in other markets, or 40%. This is really what's interesting about Bitcoin is a huge move. We're seeing so much happening that from a trader's point of view, I find it very hard to resist. I know many other traders don't find it hard to resist at all. But yeah, it's just doing its thing. Right, we'll go to a shorter term chart. Right, now what we seem to have here, there are 2 possible counts here. Either this is a 1, a 2, and a 1, 2, 3, 4, 5. Which could be 1 of 3. Incidentally, this high here on some with some exchanges, that's a higher high. on other exchanges a lower high. So that does cause some confusion, and there's actually one reason why perhaps traders would prefer to avoid this market. Right, from here we have an A, B, C, a clear B wave, and a clear 5 waves down. Okay, so that is 350 was the 50% retracement level. I signaled this in the WhatsApp room and told them I was going long, and I'm now long from here. I don't signal this to subscribers, well, because I've asked them several times whether they want me to, and nobody said yes, so I just do this in the room. So we've now got a wave pattern here, which is encouraging. It's a bit short term, but it's encouraging. And of course, IG is closed, FX choice are closed, so you can't currently trade. But we seem to have the beginnings of 5 waves up here. So what could that 5 waves be? I think there are 2 basic possibilities. Either we've got the 1, 2, 1, 2. So we've now got an impulsive wave 3. The alternative count, there are other counts that are positive, but the alternative count is that we've seen an A, B, C, A wave, a B wave, and now a C wave. So in either case, there's a good expectation for 800 points, so of around 800 points, no, 1,000 points. That was just below 3,000. This is just above 4,000. So that's an A wave. Then the B and the C, that's a move of 1,100 points. So even if it's corrective, we should see a move to 4.6. So that's 1,000 points, odd. But if it's impulsive, then we could go way above 5,000. So this is a low risk trading opportunity where we can, well, obviously depending where you enter. I was entering with a stop of around 50 points, I think, so pretty tight. Let's go down and look at the actual action since the low. And what I like about Bitcoin really is the way in which these patterns just resolve in the Elliott wave. It's just so clear. 1, 2, 1, 2, 3, 4, 5, 4, 5, 1, A, B, C. This is just textbook stuff. I mean, it's unbelievably clear. 1, 2, 1, 2, 3, 4, 5, 4, 5. So 3 could now be over. Looking for a pullback. Shouldn't take out the higher wave 1. That's what we look for to confirm the count. 5th wave coming in, I would expect. Then a bigger correction, ABC. So I would expect that when IG come back to life on Sunday morning, what we'll be seeing is either we'll have seen this 2-wave decline and we'll be going higher, or we'll be still seeing the second wave come in. But it should be a lot higher than it was when it closed on Friday. For this reason, I was happy to leave the positions running. I did reduce the size, anyway, from an Elliottian's point of view, I think this is almost hard to resist, unless you've got plenty of other markets that you are very happy trading, I guess. But the simplicity of this is quite refreshing. Anyway, it's been quite a long report, so I didn't mean to go on quite so long. I hope you found it interesting and useful. Back to the report on Tuesday morning for subscribers. Feel free to be in touch. I'm always welcome feedback, questions. Always happy to cover markets people would like me to if I can. It's not always possible because when one creates videos, reports, etc., it's always good to have food for thought. So questions are extremely useful. Anyway, have a great weekend. Thanks for listening, and bye for now.